this shit cracking. Get this shit started.
Wait, can I charge my phone before we start this?
Yeah, you got a charger?
No, I don't.
All right, let me
My
use
bad.
No, you can use mine.
I was like, should I bring a charger? I was like, nah, you probably have to.
Yeah.
Good looks.
This table was so convenient. This is probably my best purchase.
The table?
Yes. This table cost me about $270 for this big ass table. And it came with the outlet joints.
Hell yeah.
That's just so convenient.
That is love right there.
These are tables you'd see in like fucking offices. Fucking office rooms.
Yeah. Like, this setup's tough. I'm telling you, the setup's actually tough. Like, this is a setup right here.
Alright. We're just gonna warm up before Kennedy gets here. About stocks. But yeah, what you were saying was about stocks, for real?
What I was saying was, it's easy as hell to do it. Like, all you have to do is download the app, pick a company you think will be around in 10 years, and buy the stock. That's all you have to do. Don't worry about losing money. Don't worry about anything, bro. Buy the stock. It's going to go up in 10 years. You like Nike? Buy Nike. You think McDonald's is going to be around? Buy McDonald's. You like Procter & Gamble? Buy Procter & Gamble. You like Starbucks? Buy it.
So you
Like, I'm not even
Starbucks?
playing. Like, do you look at what the business does? I'm sorry for turning up so early, but look at what the business does. Do you like what the business does? Do you think people will like what this business does in 10 years? Buy the stock. You're losing money next year on your investment?
People don't realize that.
Don't
You
sell
really,
it.
You don't really lose money in a stock unless it goes to zero. That's when like you lost all your money. So like, say if a stock was 150 per share, and then you bought one share of stock, that means you have $150 worth of that stock. Now, if that stock were to go down $2, you lost $2. That's how much you lost. Some people may think, okay, I'm losing more than $2. That's different. Like, that's if you were to buy multiple of that stock, and it's depending on how much you bought it for. Like, for example, stuff like Bitcoin. Like, you can buy a percentage of Bitcoin. Like, stuff you can buy a percentage of, whatever you put in there, you can lose quick. Because, say if you bought a percentage of Bitcoin, like $50 worth of Bitcoin, that's like 0.007% of Bitcoin. That's like 7% of Bitcoin. Right? If you buy that, if Bitcoin goes down dramatically, like $1,000, then that's when you lose all your money. You know, you put $50 in, and then they lost like not even $1,000. I think it's like $50. If they lose $50, and you lose your $50 as well, because the buying price for one whole share is $6,000. So you're not gonna really lose all your money unless the share price goes to zero. That's something that people don't really understand.
You lost your money when you sell. When you sell, that's when you lose your money. If the stock goes down $50 and you never sold it, you never lost any money. You're still invested in this. You're still invested. Of course, your portfolio value will go down, but you technically never lost your money. You're still invested. The stock could still go up.
Yeah, that's another thing.
Right? And when the stock goes down, you don't sell. You buy more stocks. Why? Because the value of the stock is lower. Like, the reason why I'm spazzing off Rip is because I've had so many friends, I'm not lying, say, bro, you never put me on investing. Bro, why haven't you ever helped me with this? Why haven't you ever helped me with that? You've been bluffing with this. You've been bluffing with that. Then watch this. Listen, I see a lot of you guys wear a lot of Nike stuff. What is all right, never buy it. I mean, I would because like I'm thinking right now, when it's high, don't buy. And right now the market's like kind of at an all-time high right now. So I wouldn't really get into it now, but at the same time, it doesn't really matter because it's going to get higher in the future. Like, if you want the perfect time, just wait until we have a recession. Wait until all the stocks are low when everybody's selling, and then you buy, because you're supposed to buy low, sell high. That's the easiest thing. When the stocks, if the stock was trading for 100 and now this year it's at 50, wonderful time to buy. If it was at 50 and it goes back up to 100, yeah, wonderful time to sell, right? And that's like, it's so basic. Like when we were talking about it last podcast, there's people taking biochemistry classes, taking Calc 3, and afraid to invest. The stuff you're doing in that class is harder than what we're talking about right now. Don't get me wrong. When you really start getting investing and you really want to start trading, like day trading and stuff like that, then it gets really, 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 really difficult.
Because you have to pay attention to
exactly. It can start getting very technical.
Graphs, and that's what stuff like statistics and calculus is for, and it's a lot.
It's unpredictable. Like basically, stocks are unpredictable. But it is predictable when you look at a company and then you look at society and you say, okay, will this company be around in the future? Will people buy their products? What are they doing? What is this company trying to look for into the future? What are they doing now? Are they, you start asking questions when you start breaking down these companies, and that's how you there's different ways to invest. You have the technical investors that look at, the charts and the graphs and all that. But since we're talking to people that probably don't have, that expertise, just look at what the company does and just know that you have time on your side. It's not like you're not looking to make money in a year. You're not looking to make money in 6 months. That's not why you're investing in stocks. You're investing in stocks for passive growth, for passive income over time. And that's why you have to look at it in a long time period scale, because you're not going to make a ton of money off jump in stocks. Actually, you might even lose money because you're not experienced enough at the time. And it's okay. You're going to make some mistakes. But if you're new to stocks, I'm telling you, look at the top companies right now. Apple, Microsoft, Amazon, Google, look at them. See what you can afford. Buy the stock and never sell it. Don't sell it. I don't care what the market looks like. Do not sell the stock. That's all you have to do. I'm not even lying. I'm so serious. When I first got into stocks, Microsoft was at $80 when I first started learning about it. The week, I'm telling you, the week I started learning about stocks, the guy said, he's saying the same stuff I was basically saying right now. Don't even wait to buy stock. Just buy the stock. Where is Microsoft right now? They're over $150.
Yeah, 160 right now.
160?
I'm checking all of this right now, bro.
So you're saying 2 years ago, I got into stocks. I seen Microsoft was at $80. I did not ask any questions. I figured out how to buy stocks. Once I figured out how to do that, I just bought it. Why? Because I have shoes that are over $80. I have clothes that are over $80. I bought electronic products, technology that are over $80. You're out here buying stuff that are way more expensive than stocks, and you can't make money off them. The stuff that you're buying most likely are depreciating assets, or they're just depreciating, and that means they're losing value. Stocks are the only thing, or not the only thing at all. There's other things out there that will appreciate in value, but stocks are something that a lot of people get into because these potentially appreciate in value. Instead of leaving your money in the bank and letting interest accumulate through your bank, what you can do is let your money work for you by investing in stocks. That's why people do it. You're just having your money work for you. If you just have $3K sitting in the bank and you're afraid of investing in stocks, you're technically losing money. Why? Because of inflation. The value of the dollar is going to keep going down because the prices of other products are going to go up over time. You might as well just invest in the stock market. There's my bad. I'm going fast. I'm going 100 miles an hour. There's even mutual funds.
It's the best type of thinking.
Yeah, my fault. But there's mutual funds. Say you believe investing in Microsoft is too risky. There's mutual funds out there. There's ETFs out there. There is literally things that you can invest in that can be managed by someone, and then maybe they take a percentage. There's so many different avenues to invest, and there's safer investing strategies than others. And that's why I brought up mutual funds and stuff like that, and ETFs, because it's not as much risk involved in these areas. And we can talk about it. We can get into detail, or you can look it up on your own. It doesn't matter. Just know that there's safer ways to invest, but I would just invest anyways, if that makes sense. Just invest. See what companies you like, invest in them. See what companies you believe in, invest in them. I guarantee you have something in your house that costs way more than a share. I guarantee if you added up everything you threw away, you could buy a bunch of Tesla stock right now, and that it's trading for like 430.
Yeah,
Seriously.
Tesla is yeah 430.
430
right
flat.
now.
This man was joking about 420 and his stock dropped. Everybody's selling. Oh my God, it's at 430 now.
For Tesla 5 years ago, Tesla was at 217.
You see, and
So
it's like
if you bought one Tesla stock last year, 5 years ago, you'd have $204 right now.
right now,
Just pocket change.
Pocket
That's if
change.
you just bought one.
one.
Imagine
And
if you bought like 10.
what else did you think about? What you bought for $240? If you have bought anything for $240
In the past 5 years.
in the past 5 years, I'm pretty sure you have. Do you still have it? Number one, are you still using it?
No.
Where is it at? Do you know? Has it made you money?
It was a big one.
I don't know.
Apple was, drum roll please, 130 5 years ago.
Can you look at Amazon's share
Now
price
it's
right now?
300. Oh man, Amazon.
Can you look at Amazon's right now?
Amazon used to be.
That stock used to be
Amazon's-
$9.
Yeah,
That stock used to be under $9.
5 years. That was like 8 years ago though. If Amazon 5 years ago was $300, now it's $1,000, almost $2,000. One share.
You know what I'm saying? And that's all for like just looking at the company, just buying the stock, and then not
Paying
worrying
attention.
about it. Don't touch it. Don't think about it. Don't try to make quick money. Like if you believe you can, don't get me wrong, get into it. I'm not even trying to hold you back. If you feel like you can trade weekly, daily, monthly, go ahead. But for the people who are saying, "Oh, I'm afraid of investing because of," and primarily they say, "I'm going to lose money," and pick any company we just said if you want, invest in it, and don't even think about it. It doesn't matter. Don't worry about it. And another tip is what makes it even better is if you invest in stocks that kick back dividends. And dividends are basically a company will pay you a certain amount for just having their
being a shareholder.
Exactly, being a shareholder. Because the purpose of stocks is you're basically just getting equity within a company, like basically, and they will kick back dividends for people that invest in their securities.
So it's basically free money.
It's free money.
being
Like
a
if you look at my Fidelity,
of
like I
the
don't
movement.
I don't touch it. Like I don't think about it. All I do on Fidelity is move over money and then just buy like a few shares of whatever, and then I just let it sit. And then if you focus on dividend stocks, they'll pay you quarterly, so 4 times a year. They'll pay you semi-annually, which is 2 times a year, or annually, which is 1. I think most of them are quarterly, but I'm not trying to like get too technical or too literal because I don't want to be wrong. But all I know is they pay you periodically for just having their stock. And the more shares you have, the more they will pay you because they'll pay, like, for an example, 70 cents per share. So you're getting free money. All by investing. All because you just said, okay, I'm not really worried about that much. I only invest with the money you are willing to lose because some people really, get antsy and get caught up in the now and they want to buy and sell and buy and sell and buy and sell. That's when you start losing money. Just purchase a stock. You can do one just to like see how things go and just hold it for 10 years. They have a 10-year mindset right now. That's why the younger you are, the better. You invest in stocks when you're 20 and you hold all those stocks when you're 30. What do you think is going to kick back to you?
9 times out of 10, the same thing you wanted when you were 20, you're going to want when you're 30. So
Exactly. And the thing is, I forgot what I was about to say, but it was key.
it's not really a mindset thing. It's just like some things don't change with people. It's like when you're in high school, you wanted to be the popular person in high school and you want to be the popular person in college. So you're going to buy the same shit that you would have bought in high school now in college, because you probably have the same. You probably got more money now since you're in college and you're probably older. So now just think about it like that. If you think about it like that, it doesn't, not pre-long, but it doesn't. It cuts down the time because once you think about it, it's like, oh, I'm investing at 20 and I'm waiting till 30 to do all this. It's a long time, but it's really not. Time really flies. We're in the year 2020. Happy New Year, by the way.
Yeah, Happy New Year. Happy New Year. I came on crazy. But yeah, like,
Keep going, bro. It's the best type of thing.
yeah, like investing, I'm not going to say it's easy because it's not. Like, when I first got investing, I made 2 accounts. I made one to just hold stocks and not do anything, just hold them. And then another one to trade, like, actively. On the one that I was trading actively on, I lost like a lot of money. I lost a lot of money trying to, like, really just play around the market. But at the same time, like, I was willing to lose all that money. I was like, I wasn't even that old. Like, I was like 19. Yeah, 19. So I was willing to, like, lose a few $100 like back then, and then that gave me the experience to be able to, trade weekly when I want to or monthly when I want to. But I found out that strategy, it's very hard, and you have to be really technical for that, and you got to be really on your game. Like, so for someone who's just getting into it, you definitely should just play that long-term game, because honestly, that's like, I went from trading daily, like weekly or every other day, like I would be trading something every other day, to now I just buy and hold. I'm not even focused on the next day. I'm focused on, all right, is this company going to be around in 5 to 10 years? That's all. That's like literally my mentality with investing right now. All that, I don't use any of that technical stuff. I tried it. It helped. It helped me. Trust me, it did. But if you want to make your life easy, if you really don't want to be that investing guru or that stock guy, then just buy and buy and hold. That's all I gotta say. And we can get into like little different metrics, different tips, like dividends, like mutual funds, ETFs, and stuff like that to make your life a little bit easier. But the basic principle is that. Like,
we're gonna get into that very soon. As soon as I get this camera back up, I really should get fucking another SD card. Multiple SD cards are important.
yeah, very. But yeah, when Kennedy gets here, like we can keep getting into it. But and then it's not only just stocks. Hold on, and then some of this stuff I haven't gotten into yet, like real estate, buying gold. Right? There's just things that will appreciate over time in value. You just have to buy things that will appreciate over time in value. Those should be your purchases. Something that will appreciate over time in value. Or yeah, that's all. Like, that's really how you have to look at it. You can literally Google this question and it will pop up with much more answers than what I'm giving you right now. But yeah, I have to like send this text message real quick. We're getting the camera straight.
Call 1-800 steamers.
Because the purpose of investing, and we're not even just talking about stocks right now, the purpose of investing is that you make money passively. You could be doing something completely different, where you're putting none of your time into something, and you could still be making money. Warren Buffett said, If you can't make money while you sleep, you're going to work until you die. If you can't make money in your sleep, you're going to work until you die. If you're popping up and you're getting paid, your presence is requiring your pay, or your time is requiring your pay, you have to take it up a notch and start getting into things where you can make money without even being around. You can make money while you're asleep. You can make money while you're eating, literally. And that's why people start jumping into stocks early. Because the more time you have behind a stock, the more money you can make. Because we can start talking about compound interest and all that with accounts and all that, but the purpose of investing is to make money without you requiring your mental energy, to make money without you requiring your presence, to make money without you requiring your time in a certain area. You don't have to show up to work to get paid hourly. You don't have to show up to work to get your salary. You're getting your salary, or you're getting your income by just putting your money into something. You're putting your money into something and you're having it work for you instead of you working for your money. Those are two completely different things. You make $500, flip that 500 into 1,000 instead of working to get the 500 or working to get to $1,000. Instead of saving that 500 and then working to make another 500, you could put your 500 in something that will accumulate and appreciate over time. And then you could still be working, and then you can combine those two and it will double or triple. Quadruple. It's just another way to make money without you having to physically put your energy into it.
No, for real, because a lot of people need to. Another thing I want to add is there's a difference between like stocks and foreign exchange. It's two different things. Foreign exchange is like stocks, but foreign exchange is more like day trading because it's quick, happens, spontaneously and stuff. There's no long term. Well, there is, but nobody really sees long term in foreign exchange. Because for foreign exchange, you got cryptocurrency, and cryptocurrency changes daily. Stocks change daily, but not as fast as cryptocurrency.
Yeah. I'm not in like Forex. I thought it was just trading currencies. I thought that's all it was. It was just trading currencies. But I'm not sure.
It's a little bit more.
There's a little more than that?
Yeah.
Like you're just trading, all right.
Yeah, because it has an effect. There's effects. There's things around the world that affects the market in foreign exchange.
Mm-hmm.
Like somebody being, for example, somebody showed me a video of how the president getting impeached affected the foreign exchange market and how you could have made money off of it. So, yeah, there's many factors that affect, just like stocks, but like it's currency basically. That's why you'll see some things like Ripple or other foreign exchanges for like a couple of cents, and you never see it any higher than that because it changes. Like it's a rapid change. It always changes. As to stocks are so much easier. I feel like more people should get into stocks than foreign exchange because it's so much, like Nell said, it's so much easier to work with. And if you know nothing about investment, you can just download Robinhood and start right there. Shout out to Robinhood for the free sponsor, by the way. I mean the free advertisement.
The free advertising. But like, I want to like switch it up a little bit from like investing to like managing your money that's like it's a similar topic, but something that I thought about while you were speaking was like how people, they try to show that they have more money than they actually do, or for society we have this notion to like want to buy expensive things or expensive apparel or materialistic items, when in reality we should just be focused on increasing that bank account, increasing those assets. Why aren't we focused on that? And then if people show that off, then they're flexing. But you can show off a Chanel bag and say like, oh, I love it. I don't know. That's kind of strange to me how like there's certain we have like a certain perspective on certain actions. The actions that are necessary to put yourself ahead in life are frowned upon, but the actions that put you behind are rewarded and idolized. Why? I don't get it. I get it, but I don't. Like, I get it because I understand you want to, like, show people, oh, I have this, I have that. Or you want to let people know, like, what you got. I get it a little bit, but you've got to know that there's ways out here where you just put your money that you're showing off and you'll never get that back. You can put money inside of it or whatever. You can use it in whatever way you want to, but in reality, like, you could have used that same amount of money to make you even more money. And then if you're a person that actually does that and then you show people, then they're like, damn, look at him. Like, fuck that guy. Like, and stuff like that, you know? It's not, I don't do it, but I know other people that do it, and they get like bad vibes doing it. Like, people give them a bad response. But I know if he got a new pair of Jordans, people be like, oh, those are hot. That's fire. Blah, blah, blah. Why is it like that? I don't know. Why is society like that? That could be a question, like, to you. What do you think about that? Because I don't get it.
One side is... You said one side is bettering it for others, and the other side is bettering it for yourself. Like the new pair of Jordans, that's not really, well, it is for you, but like in the beginning, it's not really for you. For most people, it's not really for themselves. It's for the others.
Yeah, to be perceived by someone. Yeah.
And I'm just speaking. When it's some people, because I'm speaking for the sneakerheads, like some people are true sneakerheads and actually like doing it. It's a hobby for them, and they like to collect them, and it's for them. But there's other people who buy those shoes, Yeezys, Jordans, Balenciagas, Ferragamo belts, all the type of stuff for themselves. No, not for themselves, for other people's.
Yeah.
And then the investing side is to better yourself. A lot of people, don't see it as that. It's like a really grown mindset when you think about it. Like, you're bettering your pockets. Like, if you give a kid $5K right now, first thing he's gonna think about is, oh, what am I gonna buy with this? Instead of investing it and making more money. He's just going to want to buy something. He's going to buy multiple things. First of all, he's going to go to the mall. He's definitely going to the mall. So it's $5,000. So he's probably going to go to the designer side of Towson, or the expensive side of White Marsh, or any expensive mall with all the, nice stuff. If he can't go to the mall, he's definitely pulling out his laptop and, putting it all on the card. You feel me? So he wants to spend it. Instead of, investing it, he would want to spend it. And it's just like a mindset type of thing. I used to do the same thing. I would get, for like the young people listening out there, all the birthday money, all the Christmas money you get, graduation money, if you graduate high school, all that money. Once you get it, it's going to be like, okay, what am I finna buy? Or how am I about to spend this money? Or now I have money to get this, that, and the third. It's never, okay, I got this money, I'm about to invest it. Because a lot of people don't see, when they see investments, they think big people. They think people with money. So it's going to involve a lot of money. And investing doesn't really involve a lot of money. It's accumulation. You can start with...
Wait a minute.
You can literally start with $1 and invest into a stock that is $1. Now, if that stock decides to go from $1 a share to $20 a share, you just made $19-ish per se.
Wait. First of all, hold on.
Was that Ripple?
No, this is.
Oh no.
This is a stock that's $2. $2.05.
Oh, I was ready to say. I thought that was yeah. It's literally like Ripple. Ripple's like 15 cents, but it's tricky. That's a whole nother discussion.
It's $12, bro.
Yeah.
What can
You'd be surprised. And that's Robinhood, right?
Yeah.
If you go on Robinhood and you just put $100 on your account, you could buy any stock you want.
Stock is $12.
Up to $100. You can buy multiple stocks that add up to $100. That's how you invest. And then any return you get from those stocks will accumulate. The returns or the returns that you get that go up, that little arrow, that's the money you made. So if one stock went up $2, another stock went up $2, one stock went $5, you just made $9. You see how that is? You know, and you can spend as little as $2. And it's always happening from 9 to 4 o'clock. That's when the market is open. It's 9 to 4 o'clock.
Coca-Cola's $55.
For real. What's another good
I
stock?
guarantee you had more Coca-Colas that had more money, or you had so many Coca-Colas that it was over $55 in your lifetime.
It's
$55.
Disney stock right now it went up $3 today. So if you had one stock in Disney, you would have made $3 today. If you had 9, you would have made 27. If you had 20, you would have made 60. $60. But that's off of that's off of how much you put in though. So if you had like 20 stocks of Disney at $150 a share, that's like, I don't know how much that is, but that's actually like over $1,000. But off of $1,000 investment, you would have made at least $60, which is not horrible because it's something, but still, you know. So, what's another good stock?
There's a lot.
There's a lot. These pharmaceutical stocks be going up. These are the stocks. I don't know if
all right. My phone's not working.
Oh, for real?
Yeah. All right. They're plotting on us. They're not letting me, educate. Like what? That's crazy. There we go. All right.
A pharmacy. I don't know if I should say this on here. Well, fuck it. Pharmaceutical stocks are the stocks that you see on TV that people invest in. That people get in trouble for inside tradings. Those types of companies, it'd be pharmaceutical companies and Fortune 500 companies. Their stocks, those are the people who always have like inside trading cases on their asses. Because, yeah. But yeah, there's hella pharmaceutical stocks on here.
Procter and Gamble. Know who they own?
Who? I don't even know that.
Let me tell you. So Procter & Gamble is $123. Do you know who Procter & Gamble owns? Let's look up who Procter & Gamble owns. You ready? Like, it's about to get crazy. $123. Let's find out what they like.
Well, yeah, that's another thing. I'm glad you say that. Some companies be low-key companies that own a lot of companies that you know. Like, for example, I forgot the name of this company, but these are the people who be making bread. Like, these are the people who be making, like, bread. I forgot the name.
You want to know what real money is? My bad.
No, it was these are the people who make like the bread.
I forgot. Bread, not this is, rapper money. Like not like
generational bread. Wealth.
Generations. Your whole family tree is good. You don't like they are good.
It was I forgot the name of the company, but there
I can
was
show
somebody,
you one right now.
There's somebody at my job was talking to me about it. This company is a bakery company that supplies the buns to McDonald's and Burger King and all these other fast food restaurants. So think about it. They supply the buns, the hamburger buns, to all these companies. So they have a contract with all these companies. So say if McDonald's stock would have skyrocketed, so would this company's stock as well. Those type of companies be making serious bread. These are the type of companies that a lot of other people invest in too, but you just don't know the name of them because they're not really out there because they're like the suppliers. You know, McDonald's like the middleman, and then we're like the junkies, basically.
All right. And my fault if like the previous stocks I showed you didn't pop up on the camera because I was on some hype stuff. So if you didn't see like any of that, my fault. But look at this, Procter and Gamble. Do you see this? Hold on. Let me really get up to this. Because it might go this far.
It still hear you.
All right, I'm not even gonna move it.
Yeah.
All right, let's see. Like, all right, ready? So Procter and Gamble, Pampers, Tide, Bounce, Ariel, Downy, Gain, Ace. Come on now. You know these brands. Puffs, Always, Tampax, Head and Shoulders, Old Spice. Come on, Dawn, Febreze, Gain, Mr. Clean. Come on now. Gillette.
Damn.
Come on now. They own all of this. Vicks, Pepto, NyQuil, Crest, Oral-B, Scope, Olay. Come on now. That's one company.
I'm telling you,
That's one company.
It's those low key generic ass companies that own other companies that you know of. That
is
supply those other companies. They make serious money.
Serious. And I want to highlight
Olay.
I want to highlight that.
How long Olay has been around?
I want to highlight serious money. Like, what is serious money? Serious money, think of like, I'm not even going to talk about Jeff Bezos because everybody looks at that man. There's people out here making $50 billion. There's people out here making $30 billion, $20 billion.
You don't even know their names.
And you don't know their names. You don't know who these people are. Billions of dollars. But you know all the other heads that they're making money. Don't get me wrong. Like, you give me 500 grand, I'll be happy about that. You give me 10 grand, I'll be happy. But looking at life like 20 years down the line, I'm focused on B's, billions. Because when you're focused on the highest amount, or you're focused on that pinnacle, where are you going to land? If you're focused on making $10 billion, where do you think you're going to land if you don't hit $10 billion? It doesn't even matter. You might land on 900 million. You might land on 50 million. You might land on 100 million. You might land on 1 million. It doesn't matter. Look where you're landing. And it's not a game. Like, you have time on your side. There is no, okay, you need 50 million by this point. You need 30 by this, or like 6 by this. Just keep doing you. Have your goal in mind. Keep going for it. There's real money out there. The money that they're showing you, the money that like a lot of places are showing you, it's not even real money. I'm telling you
right now.
6 figures, that 100,000. Like, I'm
gonna tell you, with I forgot. I don't think somebody told me this. It just came up to my head. If you can see it, it's not that much. If you can see the money, you can. It's not that money. If you can see the money in cash, it's not that much. Trust me.
Gem, nugget. I'm telling you, because like at beforehand,
you'll never see $1 billion in cash ever.
Really understand how much money these people make.
Unless it was unless it was in a federal bank. If you can see it in cold hard cash, it's not that much. The money you can't see in cash that's a lot of money. That's the money that never runs out.
Never runs out.
Anything you can see physically and touch physically is eventually going to run out.
And in today's society, we got this cycle of we get our paycheck and then we burn it. And then we got to wait for the next paycheck. Like, that's the money that you're getting, the amount of money that you're getting is setting the tone. And your habits are backing that, are feeding the energy of how much money you're getting. Because don't get me wrong, that's why I'm trying to highlight this before I keep talking. If I had a $100K salary right now, I would be happy, but I would not be satisfied. Those are two different things. If I had a 100K salary right now, I would be happy, but I wouldn't be satisfied. Why? Because there's more. I don't want to have this. I don't want to have a life to where it's cyclical. Like, I need my paycheck to keep going. I need my boss to give me the next thing to just keep my life flowing or moving. And it's backed by, okay, when I get my paycheck, I start buying stuff that I don't need. And I'm not increasing that amount of money so I don't have to keep getting fed by somebody else. And that's like the whole mindset on all of this. It all attaches to one another. Understand what real money is. Real money is not 70,000, 100,000, 150,000, 200,000. Like, unfortunately. And the more ambitious you are, honestly, like, you'll have different opinions on this. Because some people say, like, all right, 250,000, like, I'm straight. Like, you know what I mean?
Yeah.
And, like, the comfortable level on, like, how much money you have, like, obviously, like, if you're in six-figure land, like, you're comfortable. You're fine. But financial freedom, that, we're going to keep talking about that.
Financial freedom is basically money when you don't have to worry about money, ever. All you have to do is just get it. You don't really have to work for it. You just get it.
You get to do anything you want.
It's
like,
financial freedom.
Whatever you want to do, like, you can do it.
Don't make these Instagram bloggers and all these other people, not to shame them or bash them, tell you too much or tell you different. Literally, that's what I'm saying right now is financial freedom. Like, that's it. It's when you literally can just, if you see something you want to buy it, you go get the money. You don't have to really work for it, but you just go get the money. Or you don't have to really save for it. It's just there. That's financial freedom right there.
You can do anything you want when you want.
You're not tied down to anything. You just, you do whatever you want whenever you want, and you don't have no worries.
That's not 100K.
It's like it's like swiping an endless credit card that doesn't run out. Anything you do, just swipe.
Mm-hmm.
It's paid for.
Right. And you gotta
you don't have to worry about the bill.
Mm-hmm. And you gotta remember, it's not like I'm at 6 million, I'm financially free. Yeah, you're financially free, but you have to sustain that lifestyle.
Facts. There's 6 million and there's 7 million. There's 8 million. It's 9 million. And there's 10 million. So
there's just more. And you
every income has a lifestyle. Every single income has a lifestyle. So once you make this income, you have a lifestyle. And what we tend to do is spend beyond our income, so we can live beyond our lifestyle. That's why when we get a check, like Cornell said, we get a check, we spend it. Like, we may get checks for $300, and that's a $300 lifestyle. But obviously, you're gonna want more. But the problem is, you're always going to want, or since you're always going to want more, but you're not willing to do more, you're always going to spend beyond your current lifestyle. That's why people always spend from check to check to check, because you're spending more than your current lifestyle. Nobody's going to be satisfied with a $300 lifestyle. Some people are just never satisfied.
I think you hit a wonderful point, because, like, the goal isn't to live beyond your lifestyle, it's to live below it. Because once you live below it, I was about to literally get into it. Okay, you have your paycheck, but that's just, you can do so much more after that. And that's why managing your money and investing your money and saving your money and just knowing how to, like, manage it and maneuver can go a long way. Your camera. Right when you're about to start going nuts. But you can. There's more you can do. So if you get a paycheck for $300, right, and you manage that money well, you can turn that $300 paycheck into $600. You can make that $300 paycheck stretch longer than a lot of people. Like, if you just got $300 and then you went and blew it on something that you really didn't need, then you don't have it anymore. But if you use that $300, you take 10% of that on stuff that you want to just do recreation with, like have fun with. You take another 30% and you save that 30%. And then you take that next 60% and then you invest that. Like, that process is just like much better than just having $300 and then just doing something with the $300. Like, we're not only coming at the amount, but we're also coming at your actions behind the amount that you receive, because both of those are important. The reason why being ambitious about how much money you want to get when you're older is important, because that'll put you in higher settings as you move on. If you're never satisfied, you're gonna want to keep getting more and more and more. And then once you keep getting more and more and more, you have the skills to be able to handle that. There's a reason why people become broke after they win the lottery. It's not all about how much money that you make. It's about what do you do when you have.
Won the lottery and went broke.
Ain't
that about a bitch?
There's many people that have won the lottery and became broke because they didn't know how to maintain their lifestyle. They were living somehow beyond their means. I don't know how that's possible when you win the lottery, but like they're living beyond their means. They couldn't. Facts. And how much money did they make? I don't know in particular, but they're making lottery type money and they're losing it all.
It all goes back to what Drake said in the interview. If you saw that, he said you're always if you are exposed to more, you're gonna want more. You're always going to want more. Once you're exposed to something, you're gonna want more than that something. It's just natural. If you're making $1 million, you're gonna start hanging around with people who make $1 million. Also, gonna start hanging around with people who make more than $1 million. So you're going to always want more. Let's go to the drawing board real quick. Let's say you make $450 a check. All right. It's two types of $450 people. This person makes $450. This person makes $450. Okay. Now you just made $450. This is after taxes. Now, some people say 400 and just use 450. Some people. As a check.
Some people.
Some people will just blow the whole 50. The entire whole 50. The entire 450 gone. Blow the whole thing. Now, you ask, what would you blow $450 on? Well, being a person from that world, I can thoroughly explain it to you. I used to be of that world. I still know homies in that world. Shout out to them. But if you are one of them, you better listen.
Hey, yo.
Oh, my God. $450. What can I think of something I can buy off rip? Now, say some Jordans came out. Jordans are typically $190. Plus tax $200.
Damn. Listen, this man is on it right now.
So what is it? What that is? $200 right there. Now, you're gonna think, okay,
$250.
$250. Yeah, my fault.
Yeah.
You're gonna think, okay, I need some food for the week. Now, and you get both these people get paid bi-weekly. Both these people get paid bi-weekly. So, all right, I need some food. So, what are they gonna do? $50 for food. I got $200 left. Now this 50 is in the savings account. So let me put this in blue. So this is added to the savings account. Oh no, the checkings account. This is added to the check. The blue is added to the checking account. The red is what is taken away from what's taken away from your earnings. Now you have 200 left. Now, obviously, what people are gonna do is not taking in consideration everything. So they have $50 for food. Now you would think, okay, how could you have $50 for food? But they don't take into consideration that it's 2 weeks until you get paid again. So that is actually enough. However,
I'd be killing my food in 2 weeks.
However, let me get to that. Y'all forgot gas. That's what I'm saying. People don't take it into consideration. So now, really, you have $20 for food. So you still have this 200 left. Okay, you just bought some Jordans. Now, say if you bought the Jordans inside of the store, you're gonna see more stuff. So 9 times out of 10, you buy a shirt, some pants. Say if you bought a t-shirt and some pants. And this is for a regular Denver person. I haven't even gotten to the people who buy designer. I'll get to that later.
Right, and hold on.
This is regular clothing, like H&M, PacSun, Urban Outfitters type of people right here.
And for like the 50 for food, right? Not only will you be buying food, but you'll be buying all the materials you need for your house as well when they run out.
Okay, and this is for let's keep in mind this is person that doesn't live on their own. We're gonna get to a person that does live.
Oh man, that's when it hurts.
This is just a youngin.
That's when it hurts.
This is a youngin who knows who got his license, knows how to drive, and thinks clothes are everything, and da 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 da. Now you got 200 still in the savings account. Say if you went and want to buy some gear. Now you shop at Urban Outfitters, that's cool. You spend a cool $60, $70. Spend cool $60, $70. That's what?
Wait, what?
30. Yeah, that's 130. You have $130 left for $20 in your checkers account. 9 times out of 10, you don't have a savings account. Not 99 times out of 10. 8 times out of 10, you don't have a savings account. So basically, these things are the same thing. So really, you have 150 left. All right. Now, you still dedicated some money to food. Say if you got paid Friday. Most people get paid Friday. So you won't get paid for another 14 days. Say for 7 days, for the past 14 days, you bought Chick-fil-A. Now, if you bought Chick-fil-A for 7 days, a typical Chick-fil-A meal with a drink, fries, and a sandwich is...
It's like $8.
Yeah, $8. I'm going to round it up to $8.
I mean, when you get the large, yeah, I get the large fry. That's my fault. Yeah.
So, 7 times 8 is $56. You're already below $100 right there. That's $94. You have $94 left. You had $450. By 2 weeks, you had $94. Okay. You're done shopping. You got the gas. You fed yourself. All types of stuff. Now, how are you supposed to put this in the savings and in the check-ins? Because you can't have $0 in your check-ins, and you want to save some money. So $94 divided by 2 is approximately what? $47. $47 here, $47 there. So about $50. You have $50 left from $450. That means you spend about $400 on absolutely nothing I can appreciate.
All right, and then you do that same process,
Mind
like
you,
your whole life.
This person is single. This person is single.
Damn.
If this person had a girlfriend.
Oh man. Oh.
If this person had a girlfriend.
Man. Vice versa, or if the woman had a man, like.
Come on, now.
It'd be getting harder. I mean, you add like their income with it, but.
Some of y'all would have already zilled this out before you even got gas and food.
Yeah. one mall trip, then you would have like shared exactly what you got on social media.
Balenciagas cost $450. They cost $450, bro. Okay, let's look at a person that gets the same type of income, but is a little bit smarter with their money. This is what typically you're supposed to do. Where's my red marker? I'm dumb. My green marker, my fault. So what you're typically supposed to do. The old saying goes, always save 1/10 of your income. So 1/10 of 450 is about 10% of your income, basically. $45. So you put $45 aside. That's 350. No, three.
When you said 45,
Yeah.
now it's 405.
Oh yeah, 405. My fault. That's 405. You have now 400 and now see once you gotten saving out the way, all of this, you can do whatever you want with it. You can spend it, you can invest it, all that type of stuff. Say you want to still invest. Say you want to invest $100. You still have $350 left. You need gas, $30. Still have what that is.
Low key, I can't even see what you're writing. Like, I'm low key blind. Like, when it comes to writing stuff, yeah.
Okay.
Low key. That's why I haven't been helping a lot. Very low key.
That's $275. Should have knew that. $275. You still have $275 left. Mind you, you saved $150 for your savings and your future and a rainy day. Da 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 da. Also, you already took care of gas. You have $275 to either spend on clothes, invest more, or feed yourself. By the time this guy was done gas, you only have $130. $130.
Yeah, let me do something real quick, too. All right.
You can take any money you want, to be honest with you.
I'm just like, erase this.
And that was just for somebody who doesn't live on their own, who's fortunate right now and doesn't really have any bills to pay.
Yeah.
Or you can use this.
Yeah, I was like, I was just gonna write something pretty simple. Like, don't take me literal, but it's just an idea. And I think it's called this. No. It is the 50. It is the 50. Okay. My fault. Something like that. I mean, it may be different, but still the concept is the same. And maybe it'll be too small right now, but it's the 50-30-20 rule.
I've heard of that.
Save. You invest this. And then you use this for your needs. You save 50, you use 30 for your needs, and you invest 20. Try that. I'll write it bigger. It's hard though. And you can even flip it around for like your lifestyle. If you have a lot of needs like that you have a lot of stuff in the house that you need to manage, like you can obviously tweak this up, but just look at like the basic concept. You save 50%.
You need 30.
You need 30.
And you invest 20.
And you invest 20. And this is just to get started. This is just getting started. Obviously, like, people have different combinations of what they do, but this is just basic. At least put this in a bank. Put half of the stuff in the bank. Don't touch it.
So let's give
Take 30%. Use that for what you need. Figure out a way.
So
invest 20.
So let's give that to somebody who. Let's give a scenario. I'm gonna give you a scenario. You got person A lives with about 5 people. Yeah, lives with 5 people, rents, college, Rent is how much you want to make rent. Split by 5 people. They live in a cheap spot. So let's say about
I'll just use an easy number.
200. Rent is 200. In fact, let me give them the benefit of that. Let me make it 170. 175. $1.75 rent. Let's say they make $520 a check. $520 a check. They work 4 days. No. 5 days a week. Let's use this rule. Half of 520 is 260. Let's get rid of rent first. Rent is 175. So let's get rid of rent first. It's already coming out. Oops. You have 345 left. Half of 345 is 120. 172. $172.05. You can do whatever you want with the cents, and put them in a jar. You'd be surprised too. Put all your change in a jar, and then at the end of the day, bust that joint open. That's an investment in itself too. So I already took care of this. Invested this. Now you have 175 left. Or no, you have 170 left. You already saved 172. You have 172 left. 172 times 20%. It's $34. I already took care of this. $34. Let's round it up to 35. 172. 172 35 is 137. So now you have $137 for your needs off of 345 because 175 is going on rent because you made 52. That's groceries right there if you ask me. And you live with other people too, so it's like you don't have to use the whole 137. You can use a percentage of that as well. So see how you know how it works if you just break that joint down. You feel me? Instead of spending the whole thing in bulk, because if you were gonna buy some designer off of 520, you know what I'm saying, that would be the whole 520. But if designer or anything that's expensive. Just break that down. You get a lot more done with $120, if you ask me.
And then, like, why don't you just get to the point where you can buy all the designer you want instead of buying it now?
Facts. Why don't you just buy it all at once? Save up. But the thing is, though, designer's in and out of fashion. It's not like regular street clothes.
Yeah.
Like,
I just meant, like, you just work to be financially free, and then you can just have all the designer you want.
Instead of having to save up to, yeah.
Instead of just killing yourself. Like, I don't know. There's, like, a lot of stuff that looks cool that just isn't designer. I don't know if it's just me, but I feel like, I don't know. Like, why does it have to be numerical based? Like, why do you need, like, a $600 jacket? Like, some do look like some of the, I'm not gonna lie, some of the stuff I do see on Instagram, that are really expensive, they be fly as I don't know what. Like, I seen some crazy ass like jackets on there. I'm like,
Yeah.
damn. Like, listen, had me contemplating. Don't get me wrong, but at the same time, you just have to remember, what is this all for? Like, why am I really buying this jacket for $600?
Are you buying this because you want it?
Right? Is it for you?
Yeah.
Like, are you doing this for you, or you're doing this to like show off to others? Like, what are you doing? Because I like how you pointed out that sneakerhead example earlier. Because like, there are people that really collect shoes to collect shoes, and I'm not talking about those people because they're doing it because like that's what they're passionate about. That's what their hobby is. But if you're just buying like all this stuff just to show, there's no point after that. Like, and trust me, I even understand splurging for yourself. Sometimes like I even get that, you know, like to appreciate, all right, I'm working on my own. This is like what I'm doing. Let me kick back to myself. And then you go and do what you need to do. Don't get me wrong. Like, I'm not even going against that. It's just like, we're just talking about a behavior, like a mindset, like somebody that just continues to do this type of stuff. Somebody that just continues to have this like consumer, like I think of like a very, I think in like a very business oriented way. So I just think of all of this as like consumerism. And that's like what fuels like capitalism. It's just what people buy. I even researched like the history of capitalism, and they said the thing that really fuels capitalism is people really just started buying things they really didn't need. They just thought like they would want it. And that's sort of like the thing that really made it grow, is people just started offering things that people just wanted instead of things that people just needed. And I see it in a lot today. There's just a lot of things around us that we just want, and things that we don't really need. And we're just focused on the people with that behavior that.
And it's not easy.
Yeah.
It's not easy to pinpoint. You dead ass have to
Yeah, this isn't easy at all.
You know, sit back and think about it and say to yourself, like, damn, I really don't need. I had to say that I used to be this dude. Like, don't get me. I'd spend
my God.
$400, only have $50 for food, gas, all that. I used to be him, bro.
Don't get me started on
Let me tell you, bro. I used to do that. Shoes, I mean, I'm a sneakerhead, but still, I used to do all of that off of a $130 check. I'm telling you, you'd be surprised, bro, how I make this money stretch.
Man, don't get me started on my spending. It's even worse. I used to spend $200 a month on food only. I would just be eating fast food.
Crazy.
That's all I'd be doing. I would $200 a month on straight food. Now I only spend $100 a month on food.
Actually,
tips, that was cap. That was fat cap.
The best tips.
That was cap.
To those people who do that, anytime you get hungry, just go straight home.
I was thinking of the budget. My bad.
Just go straight home.
Wait a minute.
If you're a commuter out there that commutes to your college and you don't live at home and you commute every day to college, you probably feel me in Cornell when we say this. Like, those are the people who spent the most money. Believe it or not. People who commute spend the most money. They spend more money than people who are on campus. We are struggling. We be out here struggling. We gotta pay for gas. We gotta pay for food. We're always on the run. We're always late. All that type of stuff. We be out here. So I'm telling you, when you have that type of lifestyle, you get to spending a lot, and you really have to sit down and train yourself to really say, hey, I don't need this, or maybe I should do this. That's one of the things I did. Like, one of the things I just said. If you get hungry, just go straight home. Trust me, like, it's gonna benefit you. Even if you go home and you're only home for 1 hour, go home and cook something real quick, eat, then come back out. Yeah. Instead of going to buy something at Chick-fil-A or McDonald's, because trust me, that $750, that $809 will rack up. Yeah. That joint will rack up on your credit card or debit card statement, and you'll go from $100 to like $20 at the end of the week.
Yeah, because like I used to just like about that statement is definitely around like $110, $120 a month. That's what I spend on food now. But I'm telling you, like, I used to just buy fast food. That's all I used to eat, just fast food. And then when I switched that to just like getting groceries and then cooking, not only is it healthier, that's like, because health is number one.
Yeah.
Talk all the other shit, like, my bad, but health is number one. But not only did it make me healthier because I was eating better, but it was cheaper, and I'm saving more money.
Saving so much money.
The goal is to live like you're broke.
Facts. You could go to Chick-fil-A, spend $7.50 on a meal, regular meal, not large. But you could also go to Giant and spend $7.50 on a whole pack of chicken. Drumsticks that I think it's like, on an average pack of drums, I think there's like either 16 in that joint or 8.
And coming from a fat boy, like coming from a natural, like, listen, I eat a lot of food. Like, it's actually bad how much food I eat. Chick-fil-A meals don't even fill me up. Like, I spend $8 just for the taste.
You telling me I'll be spending like $15.
Yeah, I spend like 12, $15
today.
I get like
that was different. I mean, I was all the way out.
I get the 12 count with the spicy chicken sandwich, no meal. I get 12 count meal, large fry, milkshake or half and half on the iced tea lemonade. Then I'll get the spicy chicken sandwich, or just alone, or the spicy chicken sandwich with a medium fry. Like, I'll be dealing with that. And then I was like, wait a minute, I'm splurging on the Chick-fil-A. Jesus. And I really thought about it. I was like, I don't even need to be doing this. I'm just gonna go to Walmart and just get a bunch of like healthy food and food that, you know, I can make it to make like some nice balanced meals, like back in the old days when my mom used to cook for me and stuff like that. Why don't I just redo that?
It's
Save so much money.
It's actually, believe it or not, it's actually healthier and more cost friendly to eat like junk, or like to eat junk food at home when you buy it out the store instead of buying it from a convenience store or fast food store. It's so much better.
It's so much better. And then the thing is, like, even though I spent $200 on fast food, don't get me wrong, I still had the meal swipes. Like, I was still using them too. So that was just like a world of its own. Now I was using meal swipes and $200. Now I'm only using $120. Meal swipes and $200 a month. Now I'm only using $120 total for my little fat self over here. Come on now. And I kill my food. I'm telling you, I destroy my food every time I get it. Like, when I have an apartment full of food, that is like, you can ask any one of my friends. I have the biggest eyes you can possibly see. Only $120 on that, like, max.
I knew I had a problem when I used to have one or three different fast food bags in my car. I was like, yeah, I have a problem.
Yeah, I have a problem. It'd be good,
There's a problem.
It'd be good.
It hit.
It hits.
Yeah, don't get me wrong.
It hits.
But once you look down at that throttle, or where the parking brake is at, you'll see one or two Chick-fil-A bags. Like, yeah, you're doing too much.
You're doing too much.
You're doing too much.
My mom said I was doing too much. Like, how you spending $200? You have meal swipes. Cornell, you have three. Like, you get like 3 swipes a day with that joint. So I'm hitting the little diner. I'm grabbing food and putting it in the platter. Close it. Got another platter. Closing it. Go home. Like, I'm good for the night. Nah, I'm going back. I mean, this is an outlier situation, but I'm just trying to stress that I used to pay $200 a month for food, but yet I had 3 meal swipes as well. So the reason why I said that is to really just focus on that. Shit's expensive. Instead of just going to Walmart, spending $120 and I'm straight. That's just one little tip. One little tip.
You go to the pizza spot in the hood, get you a chicken box for like $7.50. You can go to Walmart, get you a big old bag of golden crinkle cut fries and a $7 or $6, and it's like, you gotta pay attention because they call this adulting now, but it's like a little joke behind this. But you gotta pay attention because those packs of chickens don't cost the same. Like, it's literally per pound. So you'll get one that says $7.59, and then you'll see one that it's the same exact pack, and it'll be $6.50, and you'll go with the $6.50 one because you know you don't got that type of money. But you get the whole pack. Is 16 drumsticks in there. All you gotta do is coat them with like breadcrumbs or whatever. Put them in the hot oil pot, and then boom, you got fried chicken right there.
Right.
Then you get that you take out the oil out that pot, get you a new oil, then put the fries in that joint, and boom, you got a whole chicken box right there.
Whole chicken box.
Multiple chicken boxes too.
Multiple chicken
for
boxes.
For what? $10. Because the bag of fries is like $4. But yeah.
Listen, man, like.
But yeah, this one is getting a little long though. I ain't gonna hold you.
Common theme, like the common theme behind it all is the real way to make money, like the real way to really grow. It's not pretty. Like it doesn't look appealing. What you see in the media, what you see all these other heads have, like, and they're showing all their stuff off, and you know they make money. You know they make a lot of money. It makes you want to do it. It encourages you to do it. Influences you to do it. But in reality, like
Montclair out here selling jackets for thousands and bubble coats for $800, $900, $1,000, and they got the little Montclair symbol on the side of it. It's a bubble coat, just average old bubble coat, $1,000. You can go on ASOS right now and get with you the same bubble coat, just don't got the Montclair insignia on it for $100.
Yeah.
You know, like, you got to watch what you... Don't buy stuff because of name brand, bro. Because these name brand people are doing the same thing these non-name brand people are doing. They're buying these materials for the low and skyrocketing their merch. I mean, their price.
The owner of Louis Vuitton literally said the luxury industry is the only industry where you can make luxury margins. The luxury industry is the only industry you can make luxury margins because they put the price on what they sell. Like, if I'm selling water bottles, I have to compete with the other water bottle companies. I'm not going to boost it up. But if I'm a luxury brand and I have a name brand and I can put whatever price tag I want on it, I can make luxury margins.
But all right, we're going to end that here. You know what I'm saying? This has been another glorious episode of the AOC. Feel me? I don't know what episode number this might be. This might be episode 3 or 4, because this is like an hour 20 minutes, so I might chop this up into different segments. So, yeah, we're gonna see you next time, and then stay positive, and
yeah,
always talk.
I like that.